Invest Africa, proudly brought to you by KPMG.
Welcome back to Invest Africa. Now remember, we value your suggestions and feedback, so please send us an email to investafrica@abn360.com or interact with us on Twitter through @CNBC Africa, #InvestAfrica. Still with me to explore the investment case of Africa's property sector are my guests, Brett Abrahamse, a consultant at Terrace Africa, Thomas Reily, CEO of the advisory arm of Sanlam Real Estate Africa Fund, and in our Lagos studio is Gbenga Olaniyan, principal partner at Gbenga Olaniyan and Associates. Gentlemen, welcome back. Gbenga, I want to come back to you on this question. If we look at the enablers for the property market, what is your view on the state of readiness in not only Nigeria but in Africa broadly when we look at infrastructure and trading platforms? Are those keeping up with the increased appetite for Africa that we're seeing?
Well, definitely not. I mean, it's clear that the growth is slow, but the good thing I like about it is that the growth is steady. I would pick Nigeria as an example, a country with about 165 million people, 6% economic growth per year, 16 million housing deficit, and the rate of infrastructural growth is extremely slow. There is a bit of pressure on the infrastructure right now. Let me even speak across West Africa. Ghana, next door to Nigeria, used to have uninterrupted power supply up till about 4 years ago. And clearly the development coming up in these countries is actually far outweighing the pace of infrastructural development. The good thing is when we talk about infrastructure, we're not just talking about road and power. When you talk about telecoms, that is one sector where things are moving. By and large, I think this explosion has actually caught us by surprise. It's a good thing. The governments of these countries really need to do a little bit more, but I would say right now it's sufficient for foreign investors to come in and put down their dollars to invest in these countries.
Now, before they put down their dollars, Thomas, of course, there's also this concern of fluctuating exchange rates, especially in the context of the currencies of emerging markets being under so much pressure right now. To what extent is this an important factor before an investor comes in and puts down those dollars that Gbenga speaks about?
Yeah, I think, Norsi, at the end of the day, there are a number of factors that investors need to consider before they invest and commit their hard currency to the African story. And I think, currency clearly comes into that. And I think, that as an example is a reason why we've stuck to countries which first and foremost have dollar-based platforms at the end of the day. So the likes of Ghana, Nigeria, Mozambique, Tanzania, etc., are happy to introduce rentals indexed or at least in physical dollars. So that makes the elimination of currency risk to a large extent something that's much more manageable. But there are other risks as well. I think at the end of the day, concerns around governance, concerns around being able to invest in a platform that has some degree of liquidity as well, so they can not only put their money into an investment, but at some stage also get it out again, is very important. And to make sure that the governance and the corruption angles are covered. So I think if one looks at the amount of platforms available across the African continent, and I'm talking here north of South Africa, there are very few listed platforms, as an example, that would tick those boxes for an international investor. So, this is something that we're trying to correct, and I think, there are a lot of other companies and institutions that are going to start coming into the market at some stage. But, until those boxes can be properly ticked, I think, it's a very hard sell to an international investor to come in where you ultimately come into a very illiquid or ill-governed asset. So, it's something that we focused hard on, and I'm sure others will as well, because the opportunities are there.
I saw you, Brett, nodding your head vigorously when Thomas was starting to talk about listed platforms. Anything you want to add in there?
I think for the property developers and investors that are going into the continent, you've got to start thinking about the exit vehicle. A lot of these funds are merely developers, and that's what their investors are investing in, and they need local platforms and local capital markets to absorb the assets. We're seeing in Ghana and Kenya the new REIT legislation being touted by government there, but still the markets outside of South Africa and Africa are still very illiquid and very in the infancy stage. So I'm hoping that in the next 3 to 5 years we'll see some movement in these markets, in the likes of the Zambian, Kenyan and Nigerian market, and this benefits everyone.
Before I throw back to Lagos, Thomas, I just want to pick on the financing trends that are coming out of the space, and in particular whether we're finding that banks are responding with the agility and the flexibility that is needed by investors to put down their dollars in the space.
It's been a long time coming, and also in terms of getting the banks to understand the real estate sector and the risks involved in lending against specific assets in country. But it's changed remarkably, if one looks at the last 3 odd years or so, and I think to a large extent banks like Standard Bank via Stanbic effectively have pretty much been dominant across the continent, over the last decade or so. But of late, we've seen a number of new banks come into the market, even banks as far afield as Mauritius, coming into the debt financing space. But I think, at the end of the day, the banks are still wary when it comes to issues around development risk, and I think before they start to lend into those type of projects, they're going to have to do their homework and make sure that they're lending to the right party. So I think credibility in terms of the institutions or the companies that are developing is going to be critical in terms of getting that debt funding off. But at the end of the day, I think the market in terms of ourselves as a fund, going to the market and going to the banking sector in particular to raise debt against our property assets has improved dramatically. The number of phone calls that we can make right now to banks has improved. And also, I'd say the terms in which that lending is being made available is also starting to show signs of improvement, which, aside from the capital constraints from the investor and the equity side of the balance sheet, the debt side is certainly starting to improve. But it's still early days again, like Brett was saying just now. I think the whole continent in terms of real estate space is new, a number of new entrants in terms of banks. But it's exciting, in terms of that development.
Now, Gbenga, I want to bring you back into the conversation on the point of credibility that Thomas raises. I mean, Thomas talks about credibility of institutions, but there's also another type of credibility that we have to acknowledge, and this is the credibility of local partnerships. How important is this at the time, and are you finding that the property landscape in Nigeria is enabling for foreign investors to come in, easily identify local partners for them to make those joint investments?
There's one word you used there, which is the word easily. Now they can come in to identify, but I'm not too sure that it's extremely easy. But you see, when you're bringing in millions of dollars, most such organizations do their due diligence. I would say it is not difficult because you have organizations like KPMG, Arthur Andersen, companies who actually can give you data on organizations that are credible. We also have, world-class, fund managers. You have organizations like Actis who are big players in the Nigerian market. So I would say, yes, we have had several people who have had their fingers burnt. And these are people who have come into Nigeria and into Africa as a whole blindly. So as long as you do your due diligence, there are millions and millions of partners that you can have. Taking Nigeria as an example, in a country with 170 million people, even if you have 10,000 people who are not credible, you can fall in the hands of those ones. So as long as the due diligence is done, there's absolutely no problem.
I want to pick up on some very interesting trends that are coming out of the property space in particular. And one of these is the growth of a number of multinationals setting up headquarters outside of South Africa. We started off with Johannesburg, and then it became Cape Town, and then suddenly it became the broader continent. And we've seen this especially in East Africa. Thomas, maybe you can give us some insights of which cities are becoming the place to be if you want to have a presence in Africa outside of Johannesburg.
Well, I think, for a long time, East Africa has been important to the international community in terms of commercial office space in particular. And I think, to a large extent, Nairobi in Kenya has pretty much led that drive. I mean, they've, if one looks at the airline industry as well, I think, they've really become sort of a hub within East Africa to a large extent as far as servicing flights. So I think accessibility is also one factor that's come into it, but Nairobi is certainly one to be considered. I was in Lagos last week. week, and if one looks at the demand for quality international blue chip tenant space within that city, it's also enormous. There's simply not enough office supply to meet the demand at this point in time. So Lagos is another obvious city, and linked to that Accra, and I think both of them are linked to at the end of the day the oil finds, etc., etc. So Dar es Salaam, once again, also quite interesting. One has the recent find of the massive gas pod, which effectively stretches from the Tanzanian and Mozambican coast across to almost Madagascar. So one has that entire east coast of Africa, really Tanzania and Mozambique, Maputo, which are also interesting hubs. But I'd say at this point in time, between Accra, Lagos and Nairobi, those are probably the hotspots. And possibly Dar es Salaam linked to that as well.
Gbenga, quickly coming back to you to pick up on another trend, and I'm picking this up because the hospitality industry in Nigeria, in particular in Lagos, has been absolutely booming. I want to talk about the spillover effects that we're seeing from other industries that are spurring growth in the property sector. How big is that in Nigeria right now?
Okay, well, I'll start with the hospitality sector that you mentioned. Incidentally, I was just trying to make a reservation for some partners in a hotel this weekend, and in Ikoyi and Victoria Island, which are the two major places where high net worth individuals want to stay, the least you can get for a 4-star hotel is $350 a night, which is one of the highest in Africa, apart from Luanda, that also has extremely high rates. So hotels are coming up on a monthly basis. Intercontinental opened recently. We have a lot of foreign investors who are looking into the hospitality sector because of the fact that occupancy rates in most of these hotels are doing 70–80%, which by world standards is actually excellent.
Gbenga?
So that is one yeah.
Gbenga, let me cut you off because I'm running out of time, and I just want to throw one last question at Brett before I let you gentlemen go, to pick up on another trend. I mean, we saw what we're seeing with Shoprite Holdings a lot is taking on the role as the key tenant and then going out and getting other tenants to come on board. For me, sitting here, that sounds a little bit risky. Is this a trend that we're seeing, and is this something that other players are doing continuously?
Shoprite has been the forerunner with regards to retail in Africa, and often you find that they've been ahead of the property players looking for space to trade. And I think that now with more property developers and investors looking at the places where Shoprite are playing, I think Shoprite will come as the anchor tenant, and a lot of the, as we said, fashion retailers and international retailers will join on with that and sign leases along with Shoprite.